Hello, this is Dave, and welcome to Equity Story, and welcome to Trade Watch. So, hopefully, a quick 5 minutes where we can have a look at some announcements today and give you some guidance, maybe somewhere we can make some money. Now, this market is pretty tough, and just for I start, obviously, it's just general share advice and not personal. So, let's have a look because there's a number of announcements that came out today. None was particularly interesting. I didn't see any real opportunities there, but there are some good looking charts and there are some broker. I want to talk a little bit about we've had a number of sort of broker upgrades today, and I think that can give us a clue of maybe maybe we should take some profits or where what we should be and maybe holding. Um, so I'm just looking at TNE at the moment. I mean it's great. It's most probably sort of getting to fair value. But you've seen these sort of stocks march on and on and on, and at the moment the price action is really good, and you're seeing in America the Nasdaq holding up a lot better than the Dow. So sort of tech stories are getting a lot more love than other sectors at the moment. And possibly if you're in these sort of stories like Technology One, will hold on and could see it's up. And you know what? If it can get nicely above that $16 by the end of trade, maybe tomorrow, then we can put a nice little stop loss if you're trading under 16. So, or take a profit, whatever you do. It's obviously your money, your call. But again, good hot stock, and I'm pleased with the movement there. Um, Two stories that I think again had really good, interesting upgrades was Qantas, and I think we all know exactly. Sorry, I haven't got the wolf with me, so I'm having to read a little bit at the moment. So forgive me if I'm not always looking at the screen. But it's really interesting to see Qantas with some pretty strong actually upgrades, and I'll read this to you so you can hear it, which is quite interesting. And here we go, Qantas, Morgan Stanley. So Morgan Stanley's got an 850 bang target price on Qantas. Now, I'm not, this. Remember, it's only one person's opinion, but it's good when you've got brokers like this really sort of supporting the industry. And what Morgan Stanley is saying, they said solid trading update by Qantas, marginally ahead of brokers and consensus forecasts. Management has increased current buyback by 100 million. Morgan Stanley's buyback estimate in FY24 is unchanged at 800 million. The broker suggests further growth is not priced into the current share price and reiterates its overweight rating. And and however, although the target did fall from 8.50 to $9, but they're still bullish and they still think it's got further to go. So if I was in that trend, I'd be holding it, and as long as it holds that nice little trend line, for me, definitely it'd be a hold. The other one I think look is interesting is DBI, and I'll just go over this at the moment because it's got a great looking chart, and this has been one of our sort of preferred dividend plays. And it's only, listen, Morgans have got sort of a 276 target price. It might go 280, but at the end of the day, if you got sort of, if you can make 8% return and you get a nice sort of dividend of around 7%, they pay quarterly. I think it's in this sort of world we're living in. It's an interesting investment. It's holding the trend line absolutely beautifully, and I think buying around this sort of 259 level for those sort of more conservative investors looking for a dividend with a little bit of growth, DBI um, could potentially be an excellent idea. So it's obviously the Darrell Bay infrastructure. Um, heavily used, and they don't worry so much on coal prices. They're always uh, pretty busy, and they've always got a pretty solid revenue stream. So again, upgrade the price target around 276, good dividend. I think it's most probably a story well worth looking into. Um, Again, you can see these tech stocks like XRO still looking extremely good. And like Qantas, again, how we talked about last week, certain sectors. Look at Webjet. Again, still the breakout, still looking very good. I mean, you wouldn't be sort of at the moment getting out of this story. Um, there were two really interesting little upgrades, and the first one was Plenty Group. Now, it doesn't fit into our mold, so it's not a buy for equity story because you know what we're like. We have to be above the water level. We can only live in a positive world, right? Uh, but you know what? Get it on your watch list, and I'll tell you why. Because um, this was a really interesting. They're very bullish, and The Ocelot Claude was quite bullish on this because he said, Dave, this is looking good. This is a turnaround. It looks like it's starting to turn profitable, um, or it is turning profitable. So, um, what Shaw and Partners, and they've got some pretty good guys over there, some pretty good analysts. Their view is that cash profit of 4.5 million exceeded Shaw and Partners' forecast, while new FY24 targets are significantly ahead of expectations. It noted the cash profit result included product development costs of 10.4 million, unlike peers who capitalize this expense. New FY24 guidance includes the aim to grow revenue to more than 200 million, Shaw forecast 187 million, and the delivery of robust cash profit growth skewed towards the second half. Um, Management also plans to reduce the cost to income ratio to less than 30% and deliver 25 million in efficiencies as the group scales towards a 3 billion loan book and observes the analysts. Right, so um, they've increased their target. They're back up here at 144. Right now, we're not going to buy it, but I'll tell you what, if this starts trading and you like companies that are starting to turn around, companies that are starting to deliver profit and deliver growth, you've got to be interested. The trouble is the market at the moment just doesn't like these sort of industries, but if you can get, and arguably the climate isn't really very good for these sort of loan businesses, but get it on your watch list. If it gets over 51, starts to swing, starts to trend, well, you guess what, we'll definitely have a look at it. um, the other one, which is quite interesting, was this one. And technically, I'm sort of taking a profit here, right? Because I can see that resistance. I think these sort of stories are heavily traded. However, Macquarie come out with an outperform with a pretty bullish 150 target price on this. Now they really did. They said FIC high grade intercepts. Macquarie observes recent SA results point to a significant increase in the resource. Excellent. So they've got an outperform rating on this, and they think this could go a lot higher. So, how I would play it, I'd be looking at that resistance if I was a trader taking a profit. If it got over that 80, then maybe I'd look to buy it again and stick my stop loss under that 80, something like that, right? So, play the charts. A lot of these brokers can get things terribly wrong, like we can in Equity Story, right? So as long as you play the charts, it's going to protect you, and and uh, and hopefully get you in the stocks going up and protect you from the ones going down. TWE, I thought pretty disappointing announcement. If you're in that, get out. You know what? It's sort of one of these stories that we like because it's an inflation hedge. Everyone likes alcohol, but apparently not at the moment. Their sales look a little bit down. They're struggling. Penfolds does well, but I think the general, I'd be getting out of that and getting out a little bit fast. Um, a bit of a worry, isn't it? It's quite serious if times are getting that tough. The Aussies aren't drinking as much, so that worries me, really. Anyway, so definitely a sell. Get out of it. That price action is bad. So if you're in that, please get out of it. Don't even think about it. Um, and lastly but not least, Nvidia. So AI, after trading, it's up 15 to 24%. These AI chips. AI is a really, really interesting section. Um, and we're going to look at these AI sectors. And again, we don't have too much AI in Australia, but it just fills you more interest. Maybe one is NXT, which has all the data centers, all the storage, and you could see AI, NextDC possibly doing better and better. And if you're in NextDC, you hold it. And I'll tell you what, if you're a trader, this jumps up above 12, it's definitely a buy. On that note, hopefully I've given you some ideas, some stories that I think look really, really good. I'll put DBI on as just a reminder on as a good dividend stock with a little bit of growth, and look forward to we got live tomorrow at I've got the Ocelot with me at 12 o'clock. So see you live. Come with all your questions. I'm sure there's going to be a lot of lithium questions, and you got a lot of everyone's trading all these lithium stories. C1X, WR1. They're all up and down like yo-yos, but we'll see if we can give you some good guidance tomorrow. Should you sell them? Should you hold them? Should you buy them? That's what we're here for. All right, thanks guys. See you tomorrow on Ask the Analyst Live. Bye bye.